Assalamualaikum everyone, I'm Varda Hossaini from Economic Club Karachi, and in today's economic news desk we will be discussing as usual some important economic and local and international news. When we're talking about international important news and investment, so yes, we all know this that what is the talk of the town regarding investment. When we talk about investment, so how we could forget yellow metal, or you may say a safe haven gold. Yes, when we are talking about gold, so we all have experienced this thing, that on February 28th, gold marked its largest drop since November 2024, and as per analysts, it is due to the strong rebound of dollar, and we could see that since uh, November, the gold prices, they were on top, and investors, they were having a potential interest in investing in gold. But since the late February, the trend has changed. We all know this that from 4th of March, tariff on Canada and Mexico that will come into effect, and for sure that will strengthen dollar and putting downward pressure on the gold prices. And we could also see this that the dampened market optimism is because 10% tariff on China, which is increasing the tariff rate to 20%, and yes, that is bringing a lot of impact in US too. On the other hand, analysis, they say that this tariff war by USA, initiated by USA, is because they need to and they wish to correct their balance of payment, and they need to give some strength to their currency greenback. But for sure, that is placing potential worst effect between the trade and between the countries and cross-border relationship also. uh, Analysts, they also suggested this that if someone wish to buy, so buy on the dip approach remain the best strategy. And it has also been suggested that any opportunity to near downward present fresh buying opportunity. And it has also been suggested that the profit booking may emerge around dollar 3050 per ounce internationally, and the trade tariff might be uncertainly subside this. But until that goal is well positioned to extend gain, and potentially reading above rupee 87,500 in near future. When we're talking about the local economy like Pakistan, so we have number of issues related to economy. IMF will start its talk for the first economic review of Pakistan for dollar 7 billion bailout arrangement and disbursement of next loan tranche of 1 billion US dollar. And Pakistan has assured IMF that it will meet tax target despite shortfall of rupees 834 billion in the first 6 months. So if the concern thing is that if government is about to meet and they have assured to hit the tax target, so for sure this means that there will be another tax bomb, and some more tariff will be implied, and due to that the effects and the repercussions, they are on their way, they would be on their way, and the common man must be ready for that. Usually when we are talking about Pakistan's economy, so it's considered that Pakistan owes a lot to the international communities. But it's not only this case. The picture is before us is that the government of Pakistan, they owe rupees 35 trillion to the local commercial banks. And when we are talking about to the international community, so Pakistan is right now in 25.2 trillion, which is 90 billion US dollar, and for sure it is surpassing means I'm talking about the local loans which government owe towards the commercial bank, or the local debt which government owes towards the commercial bank is surpassing to the international debt also. And for sure, whatever we owe towards IMF and World Bank, that is a bit low than the local debts. So these terms are really more shocking when I read it out. And so we could conclude it out that really the real burden in our domestic economy is for sure borrowing and interest rate. Because historically we could see that the interest rate was standing in 22%, but these days it is around 12 to 13%, which is again a hefty amount which government is paying. Basically, investors, they are investing in the bond holdings because it is considered as a safe haven, you may say, risk free government security, in which most of the commercial banks, they are parking their money. When we're talking about the government payment, so government has to pay 8 to 9 trillion of in lieu of interest rate. For sure it will reduce public spending on health, education, welfare, infrastructure, PSDPs. And for sure it's not only our country. I think that when we are talking about the non-tariff barriers placed by our neighboring country like India, that is well played. And instead of tariff, they have implemented the quality standards, licensing, regularity checks to control the import influx on non-essential goods. So if Pakistan is also following the same policy, instead of placing and increasing the tax rate, or you may say interest rate, so for sure that could help out Pakistan to to combat all these challenges, economic challenges.